So in today's session, we'll understand what are the basic business process we should aware when we are going to work on the financials applications. So what are the various activities can be performed by each and every department, how the departments can have a communication in terms of business process. So we should aware of these points. Then when we are learning that application, whatever we are going to do in each and every application, it will be easy for us to understand. When you look at the business, the very primary processes are two. The two primary business processes are, one is purchasing, other one is sales. When you talk about purchasing, we purchase and we pay. When you talk about sales, we sell to the customers and we collect the payment. So let's look into these end-to-end cycles, the complete cycles, how the purchasing starts, how it ends with the payment, how the sales activities can be initiated, finally how we can collect the payment from the customer. So first let's talk about purchasing. So if you take the case as you are going to purchase something, if you are going to say you are going to purchase laptop, if you are going to purchase the laptop, why you need laptop? First of all, there should be need, requirement. Say you are doing this course, you need this laptop. Your requirement is laptop. That is your requirement. You are identifying your requirement. After identifying the requirement, say you are a student, definitely you have to talk to your parents. You have to take the permission from your parents saying, I'm doing this course as you know, and I need laptop for sure, for practice and for other purposes. So that means you are identifying, first step is you are identifying your requirement, then you are taking the permission from your parents. That means you have to take the approvals, permissions. You have to take the approvals from your parents. Once your parents says okay to buy the laptop, you have to visit the shops. Maybe of course you may go with the online option, or let's take here physically you are visiting the shops. You will visit the shops, okay, you will visit and you'll ask for quotation. Okay. So you will get the quotation. Simply you can take, will get the quotation. You'll get the quotations from multiple shops. After getting the quotation from multiple shops, you may perform the analysis. You may analyze the quotation. Okay. You may analyze the quotation. Analyze quotation. What does it mean by analyze quotation? It's all about simply you will verify who is giving us best price. So when you ask for quotation, you definitely have to specify the configuration of the laptop. Okay, what is the processor and what is the hard disk capacity and various specifications as per your requirement. You have to ask that when shop and the brand etc. Everything you have to address. Accordingly, you will get the quotation from the shop and you will analyze the quotation. After analyzing, you will find some quotation. So and so shop is offering at best price. You will identify something. If you are not aware of all this, you may take someone help to look into these points, which is the best processor, which is the best laptop, etc. Just you may take some suggestions from someone. Finally, you will choose the best quotation. You choose the best quotation. And after choosing the best quotation, again you will visit the shop and you will buy the laptop and you will make the payment. Okay. So right from identifying your requirement to till you make the payment, you are only one involving in this entire process. If you take the same case in case of company, multiple departments should involve in this process. As an individual, when you have some requirement of buying the laptop, so you are identifying what you have to buy, what you need, and you are taking approval from your parents, you are getting quotations from the shops, and you are analyzing, you are choosing the best, and you are buying and you are paying. No other person is involving in directly, you are only the one who is involving in all these activities. But if you take the same case, how companies can handle various departments will come into the picture. There will be certain communication between those departments to execute this right from identifying the requirement to till we make the payment. So let's see how the purchasing process can be executed, which departments involved, okay, what is starting point and what is the ending point. So if we take the case as you have a requirement, okay, you have a requirement, how you will get the requirement? You are running the company and you got requirement. What are the various reasons you get the requirement? Maybe you got some order from your supplier, sorry, your customer. You got some order from your customer. Your customer need 1,000 laptops. You got one order from your customer. When you get order from customer, what you have to do? You have to check with inventory department. With inventory department, you have to check the stock availability. We got order from our customer for 100 laptops, but how much stock is available? You have to check. If stock is available, you can supply to your customer. Say you got order for 1,000 laptops from your customer. When you check the stock availability, only you have 500 stock availability within the inventory department or say warehouse department. Only 500 we have, but customer need 1,000. Now what you have to do? You have to purchase and you have to supply. You have to purchase and you have to supply, or else you may have some assembling or manufacturing process also. That let it be. Okay, now let's talk about purchasing process. We are focusing on purchasing. We'll go with that purchasing option only. So 1,000 laptops your customer required, you have only 500. Now you have to purchase remaining 500 to supply to your customer. So in that case, so inventory department should identify what is the requirement. Requirement is 1,000 laptops, 500 stock we have. Now we have to purchase 500 laptops. Now inventory department should take the responsibility of raising the requisition. Inventory should raise the requisition, purchase requisition. Okay, we call as PR, purchase requisition. So based on the requirement in the organization, what is the shortage we have for the material or item or stock, whatever you call, the purchasing department should take the responsibility of raising the requisition. What information we can include in the purchase requisition? Which item we require, laptop we require, how much quantity we require, when we require, in which location we require. All the details will specify within the purchase requisition. So when inventory department will create the purchase requisition based on the demand from the customer, within the purchasing department, the right person should approve the same approvals. Maybe warehouse manager or inventory manager should approve the same requisition. Once that purchase requisition is approved, the inventory department will communicate the same information with the purchasing department. Inventory department to maintain the stock only. What is the responsibility of inventory department? Inventory department will maintain the stock. Okay. If any material is coming into the organization inventory, they will take it. If any material is moving out from the inventory, they'll just involve in those activities. That means they'll perform some inventory related transactions. Okay. Inventory transactions. Inventory transaction. The primary responsibility of inventory is maintaining the stock. They'll maintain the stock and they'll involve in the inventory related transaction. That could be stock inflow or outflow. They may receive or they may send out, whatever it may be the case. That is the primary responsibility of inventory department. So now the demand is from the customer. That means external demand. Sometimes the demand may be internal. Okay, internal. Within our organization, we need few laptops. Within our organization, we need few laptops. In that case also, we have to check the stock is available in the inventory or not. And if stock is not available, we have to raise the requisition. We have to raise the requisition. The demand could be internal demand or external demand. If any shortage within the inventory or warehouse, the inventory department will take the responsibility of raising the purchase requisition that should get approved by inventory department. Once purchase requisition is approved, inventory department will pass that information to purchasing department saying we need 500 laptops by so and so date, and this is the approved requisition from inventory department. That's what they'll communicate to the purchasing department. Now what purchasing department will do is, ideally they have to, if already they are in touch with the suppliers who are supplying the material at best price, okay, the laptops at best price, directly they can purchase from them. Otherwise, the standard process is the purchasing department will start communicating with the suppliers. They'll start contacting the suppliers to get the quotations. That means purchasing department will request for quotations. Okay, the purchasing department will raise RFQ. We'll see only purchasing department will do it or other departments can involve in this. That points we'll discuss later. For now, take these points it related to purchasing department. The purchasing department, based on the approved requisition, the purchasing department will request for quotations. RFQ means request for quotation. The purchasing department will contact suppliers and they'll request for quotation saying that we need 500 laptops, so and so brand, this is the configuration we require, please provide the quotations. When purchasing department would request for quotations, supplier will send the quotations. Okay, supplier will send the quotations, purchasing department will receive the quotation. Okay, receive quotations from suppliers or say vendors. So when you are going to request for quotations, purchasing department won't request for from only one vendor. Okay, they can just request quotations from multiple vendors. And just who are the which suppliers are responding accordingly, the purchasing department will receive the quotations. Purchasing department may request for quotations from 20 vendors, but finally 5 vendors may provide the quotation. So finally, purchasing department will receive the quotation. After receiving the quotation, the purchasing department should analyze the quotation. So they'll do the quotation analysis. Or simply you can say quote analysis also. Quotation analysis or quote analysis both. Instead of calling as quotation, simply you can say quote. So purchasing department will do the quotation analysis. In the analysis, what they do, which vendor is providing at less price and which vendor is giving the best terms. Say one supplier is saying you can get laptop at 25,000. Other vendor is saying you can get laptop at 20,000. The vendor who is saying you can get laptop at 20,000 is saying we have to pay immediately. The other vendor is saying you have to pay 25,000 for each laptop. You can pay that after 6 months. And other terms and conditions also the purchasing department will look into, then they'll take the decision. Okay, so they request for quotations, they'll get the quotation from supplier, they do the analysis of the quotations, finally they'll choose the best quotations based on the price and other terms. They'll choose the best quotation. Okay, they can choose the best quotation from one vendor or multiple vendors. Okay, they'll choose the best quotation. After choosing the best quotation, the purchasing department will place the order to supplier. That we call as, they'll create purchase order. Purchase order means PO, purchase order. They'll place the order to supplier. Before placing the purchase order, they have to get the approvals. Okay, they'll create the purchase order from which supplier they are going to purchase. For that, approvals are required. Okay, from purchasing department, who's the right person from the ideally like purchasing manager, okay, or who has authority to approve that purchase orders based on the amount and all other conditions, they'll get the approvals. Once they get approvals, they'll send the purchase order to supplier. Whenever supplier will receive the quotation purchase order, accordingly they'll respond, okay, by sending the material. So once we place the purchase order, supplier will supply the material. So that material will be received by our organization. That records will be maintained by inventory department as well as purchasing department also. Okay, so whenever we receive the material from supplier, we have to record the receipt. That you can call as GRN. GRN stands for goods receipt note. So whenever you receive the material from the supplier, so that we have to record in our books how much material from which supplier against which purchase order we receive. Instead of calling it as GRN, simply you can call as receipt also. Okay, So purchasing department will place the order to supplier, and supplier will supply the material that will record in our books as a GR, goods receipt note, how much material, what material, how much quantity from which supplier we are receiving, that will record. Sometimes, say for example, we received 500 laptops from supplier. 2 laptops are got damaged. In that case, we have to return that material. Okay, we have to return. Simply you can call as purchase returns. If organization is very big for this process, okay, for this process, pricing the quotations, okay, requesting for quotations, receiving quotation, quotation analysis, and all this all will be done by separate department, that is a sourcing department. If the organization is very big, they can do. Otherwise, normally these activities can be handled by purchasing department only. Okay, to understand this business process, we can take as a purchasing department. Okay, in some companies there could be separate department to do these activities, which you call a sourcing department. Sourcing department also can do it, or else purchasing department can take the responsibility of handling all these activities. And ideally, the material will be received by inventory. Inventory department will record the receipt. Purchase returns also should be done by inventory, but purchasing also will involve in those activities. So reality, the GRN will be recorded by inventory. The same information can be accessed by purchasing department, since purchasing department is involving in the purchasing activities. So these details also can be handled by purchasing department. For our understanding, you can take these points. These are the activities can be handled by purchasing department. But reality, these activities should be done by inventory. Yes, reality will do as a part of inventory. So, but these purchasing department involvement is required when even inventory department is doing. So that is the reason you can take those here. So this is how, like, first we have to identify our requirement. Based on the requirement, we have to raise the requisition. Then approval we have to get from the authority people from the inventory department. So once a requisition is approved requisition, inventory will share with the purchasing department. Based on that, purchasing department will request for quotation from vendors. They'll receive the quotation from suppliers, and they do the analysis. They choose the best quotation. They'll place the purchase order, and supplier will supply the material, will receive and will record the GRN. And if required, okay, if required, will perform the purchase returns. All activities can be handled by purchasing department with the help of inventory also. These activities, which these two departments should involve to handle them. So once we receive the material, say all the time we may return, may not return. Whenever it is required, we'll return. Okay, all the time we don't return. So whenever you receive the material, what purchasing department will do is the purchasing department will inform to payables department saying that from so and so supplier this much quantity of material we received. This is a proof of that information. That's how the purchasing department will share GRN information with the payables department. So based on the GRN information, payables department will create purchase invoice. Okay. The payables department will create purchase invoice based on the GRN information which they are getting from purchasing department. So as per purchase invoice, you can see the details like who is the supplier, how much that supplier has, how much we have to pay to that supplier, when we have to pay to the supplier, how we have to pay, through check or cash. So these are all the details. What is the address of the supplier? All the details the payables department will maintain as a part of purchase invoice. So based on the due date, within the purchase invoice, you can see when we have to pay. Say we have to pay after 10 days. After 10 days, payables department will take the responsibility of making the payments. Okay, payables department will take the responsibility of making the payments. Once they make the payments, okay, the same they record in the books. What are the payments payables department is processing, they'll record that information in their books. So that is the responsibility of inventory, purchasing and the payables department. Now say for example, here we are discussing about laptop. We are purchasing and selling the laptop. Sometimes land may be required for the company, or else one building may be required, or some machinery may be required. They may need laptops to use in the office. If they are using the laptops in the office, that is asset for the company. If they are purchasing and buying, simply you have to treat as item within the inventory. So if any fixed assets are required for the company, in that case also same process we have to follow. We have to raise the requisition to, say you want to buy the land for the company, you want to extend your business, you want to construct one building. So in that case, first you have to buy the land, or else directly you can purchase the building also. Whatever you want to buy for the company as a fixed asset, for that also we have to raise the requisition. We'll raise the requisition what we want to buy, and for that we have to get the quotations from the vendors. If it is a land, you may contact the some real estate companies or agents, and they'll provide the quotations in which locations we need land and what will be the price. They'll provide quotations, we'll analyze, and we'll place the order to the so landlord to buy the land. This process is quite common. Whatever you want to buy, this standard process you have to follow. So here the invoice what we are creating, the invoice maybe belongs to expense. Okay, when you spend the expense, you can record. In that case, you will raise the requisition to spend some expense and approvals and all. Finally, we don't receive anything in case of expense. Okay, but we have to pay to the supplier. We create the purchase invoice for expense. The purchase invoice, what we create in the payables department, that may be related to expense or that may be related to services. Okay, when you take some services and you render some services, you have to pay for it. And that expense, the purchase invoice may be related to item, inventory item, or that purchase invoice may be related to asset. Okay, the purchase invoice what you are creating in the payables department, that may be related to expense related. You spend some expense and you have to pay for that, whom you have to pay, how much you have to pay, you are maintaining within the payables. Or that may be related to some services, you've taken some services from some company, so that details you may maintain as a purchase invoice to make the payment. Or the purchase invoice maybe belongs to item. Now we take in the case as item only. So the purchase invoice may be related to item. Sometimes the purchase invoice may be related to asset. Asset means fixed assets. You purchase land, how much you have to pay, okay, to that supplier, you will be recording as a purchase invoice. So the purchase invoice belongs to expense, service, or item or asset. So if the purchase invoice is related to asset related invoice, then payables department will share that purchase invoice information with asset department. Okay, payables department will share the asset related purchase invoice information with the payables. Based on that, the asset department will create the fixed asset. They'll create the fixed assets. Okay, the payables department should share asset related purchase invoice information with the asset department. Asset department is responsible to maintain the fixed assets. So if any fixed asset purchase is happened in the company, payables department should pass that information to asset department. Okay, which information? That asset related purchase invoice information they have to share. If the invoice is related to expense or services or item, payables department is not going to share that information with asset department. If the purchase is related to asset, that asset related purchase invoice information only payables department will share with asset department. So asset department, based on that information, asset department will create the fixed asset, and based on the usage they can calculate the depreciation. Okay, they'll reduce the value of that asset based on the usage. That could be the plant or machinery or building, okay, or vehicle. So they create as asset what they purchased and they calculate the depreciation. Now payables department, what they'll do is, what are the payments they are processing, that information they'll share with the cash department. Okay, they'll share the cash department with the bank cash department. What is the responsibility of cash department? Cash department responsibility is maintaining the bank accounts. Company bank accounts they just maintain, and other parties they do the bank statement reconciliation. How they do the bank statement reconciliation? The cash department will get all the payments information from the payables department. Say cash department received payments information. So they got the information from payables department, 25 payments they processed. and other side, the cash department will get the bank statement from banker. Okay, will get the bank statement. As per bank statement, how many payments are processed, they will take the information. As per bank statement, 20 payments are processed. Now they do the cross check. As per payables department, how many payments are processed? 25. As per bank statement, how many payments are processed? 20 only. So why the variance we have? They may identify, yes, payables department processed 25 payments, but those are not yet cleared in the bank, are not yet submitted to the bank to reflect in the bank statement. That's how they'll identify. Or else they may find out the case as payables department processed only 15 payments and in the bank statement 20 payments are reflecting. They'll find out the reasons, whether the payables department forgot to enter 5 payments in the system. They may give the checks to the supplier, they may forget to enter in the system, or what exactly the issue they'll try to identify. They have to make sure that everything is getting reconciled. What we have, what payables department is doing, what is reflecting through bank account, both should match. That sort of verification can be done by cash department. So here they are just checking the payments information with the bank statement payments. This we call as payment reconciliation. Okay, here after getting the payments data from payables department, whatever the cash department is doing, that we call as payments reconciliation. So that is a activity which can be handled by cash department. So finally, to prepare the reports, what we are doing in the inventory department, purchase department, cash, payables, asset department, what are the activities you are doing? Based on those activities, if you want to prepare any reports, so all the information can be collected by common department to prepare the financial reports. Okay, to prepare the financial reports, so all the departments will share the information with the common department, so that common department will have all the data in one place to prepare the financial reports. So this is how the standard procurement process can be handled, right from requirement. Okay, what is the requirement? Laptop. Okay, right from requisition to till payment, these all activities can be handled. So payable is sharing the information with asset department and cash department and all the departments with a common department. Those are not actual business activities. So these activities only falls under primary procurement process. Right from requisition to till we make the payment, this process can be handled. So to handle this, to maintain the stock, to record the inventory related transactions, okay, and to create the requisitions, to get the approvals. So for inventory department, we have an application from Oracle, which we call as Oracle Fusion Inventory application. So by using Oracle Fusion Inventory, you can maintain the stock, you can perform the inventory transactions, you can create the purchase requisition and approvals. And to handle all these activities, okay, purchasing department very primary activity is purchase order, PO. Okay, so this here the short name is INV. Let me complete this flow. If you have any questions, we'll discuss. Okay, to do all these activities, we have an application called as Oracle Fusion Purchasing. Okay, within the purchasing department or purchasing application, the very primary activity is recording the purchase order. Okay, some companies may not get the quotations and all those directly. They can talk to the supplier, or else they have a approved suppliers, known suppliers. Directly they'll place the purchase order and they'll get the material. So that is the reason within the purchasing department, the primary activity is placing the order to supplier. That is the purchase order. That is the reason for purchasing application, short name also PO. For purchase order, short name is PO. Application point of view also, PO means purchasing application, Oracle Fusion Purchasing. By using that application, you can perform all these activities. But in some companies, okay, you can have a separate team to handle these activities as a sourcing. And even we have a sourcing application also to handle all these activities. But just to understand the process flow, take these points under purchasing. So by using the purchasing application, you can do all these activities, raising the purchase order, all the quotation process if required, they'll do it, or else directly they'll go with the purchase orders. And to record the purchase invoices and payments, Okay, we have application from Oracle, which we call as Oracle Fusion Accounts Payable. For this short name is AP. By using accounts payable application, you can create the purchase invoice and payments. And what are the purchase invoice AP is creating? If the purchase invoice is related to asset purchase, the AP will share that information with asset department. So what asset department is doing, based on the data which they are receiving from payables department or payables application, they'll create the fixed assets and they calculate the depreciation. They'll do many other activities related to assets. But to understand the process, these 2 points are enough. So to create assets and to calculate the depreciation, we have an application from Oracle that we call as Oracle Fusion Fixed Assets. In short, we call as FA. And payables will share payments information with the cash department. The cash department responsibility is maintaining the bank accounts and performing bank statement reconciliations. To do these activities, we have an application from Oracle called as Oracle Fusion Cash Management. So you can call it CM or you can call it CE, Cash Entry System. Okay, CM or CE. Why they given other name called as CE? Because we have another application called as Cost Management application. So that is the reason they given the different short name for this. So finally, all these departments, okay, or say application point of view, from all these applications will send the data to common department. So to collect the data from all the departments to prepare the financial reports, we have an application from Oracle called as Oracle Fusion General Ledger application. We call as GL, General Ledger application. So when you talk about this procurement process, these are the different departments will involve, and to support the department related activities, these are the applications we have. So this process we call as procure to pay cycle. Okay, procure to pay cycle. Simply you can say P2P cycle. P2P. Okay, this we call it as P2P cycle. Procure to pay. This process is starting with a requisition, ending with the payment. Okay. So if you want to procure something, there should be requirement. Right from requirement to till you make the payment, all the activities can be handled in this process that we call as P2P cycle, procure to pay. So along with these 3 applications or 3 departments, these departments will collect the data from payables and other applications, but these are not going to play the major role. Okay, these 3 departments will play the major role in the P2P cycle. Why we are calling this as a cycle? It is cycling activity. If you want to buy today, yes, you have to do this. If you want to buy tomorrow, yes, you have to do it. It's keep repeating. Whenever you have a requirement, you have to raise the request, you have to get the approvals, and you have to go with the quotation process, choosing best quotation, placing the purchase order, and creating the receipt when you receive the material, if required purchase returns, creating purchase invoice, making the payment, sharing purchase invoice information with the asset department, sharing payment information with the cash department, finally sending all the data to general ledger. This is quite common process. Whenever you want to purchase, this process you have to follow. That is the reason we call as cycle. It's a cycling activity. It will keep repeating. Say today we purchase laptops. If you are going to buy tomorrow, if you are going to buy again, you don't need to get the quotations. If you are going to buy after 6 months again, you may go with the quotation process, since there could be chances to laptop rate fluctuations and all. Okay. Otherwise, again, quotation is not required. Today we purchase, we may follow this complete process. Tomorrow, if you are going to purchase, you will raise the request, you will get the approvals, then directly you can place the purchase order. Okay. So to handle these activities, we have a separate application called a sourcing application. Okay, that can be handled by sourcing application. Okay. So by ideally in the purchasing application, these are the activities you can do. So that's what we have to understand. Even requisitions also you can create here. So application side, how we have, we'll see that, but try to understand the process flow. So this is all about P2P cycle. Any questions from anyone to understand this, please? Any questions here, please?
Hi Lakshman, this is Krishnaveni.
Yeah, please.
I did not see anything here, accounts receivable, like
Purchasing
accounts
process. This is
receivable.
purchasing process. Receivables will come in the sales process.
Okay.
Receivables
So if
are
you
part of sales process. When we discuss about sales process, we'll see that. Now this is purely related to procurement. We procure and we pay. The communication and the activities can be carried out across which departments we are discussing.
Lakshman, I have one question. Suppose I have purchased the land for fixed assets.
Yeah.
It's go to fixed assets. How can I calculate the depreciation? Sometimes the land value is going up, sometimes going down.
Yeah.
Depreciation might be negative, profit or loss. How can I calculate it?
No, if you buy the land in the fixed assets, you never calculate the depreciation. Okay. So you will appreciate the land value within the fixed assets. If you purchase some other assets like building, machinery, okay, vehicles and all, those only you calculate the depreciation. In case of land, no depreciation. Okay, you can just revalue. You can perform the revaluation for the asset value. Okay, as per current asset value, you can update the information in the fixed asset saying that this is the current value for this land. That's all. No depreciation land.
Okay.
Don't calculate. Other assets only we calculate.
Same thing as a building. Suppose I have purchased a new building for the office purpose. So no depreciation in
No,
this
don't
case.
say like that. Don't say like that. Okay, when you are selling, you may sell at more than what you purchased, but reality your depreciation is applicable. You have to claim, right? So for that you calculate depreciation. When you are selling, at what price you are selling, how much you are getting, that you can manage. Yeah, that's different.
Depreciation might be positive or negative.
Yeah.
It can be.
For some exceptional cases, that is true. But ideally, the negative.
Thank you.
It would be, I mean, depreciation negative, instead of saying that, it could be depreciation or appreciation. Okay.
Yes.
Almost all the assets, it would be depreciation. Like land and all, there will be appreciation also. So your properties will get appreciation. Ideally, we don't calculate depreciation.
Thank you.
So, good morning.
Yeah, good morning, please.
Good morning. I have a question is, now at the time of when you're doing a purchase requisition, the user who's doing the requisition will not know whether the particular item that you're purchasing is whether a asset item or a inventory item. So at what point will either the purchasing procurement officer identify that this particular asset is or a particular item is an asset or a
simple. When you create these items in the inventory, we have to specify that information. That is which item. That is expense item, asset item.
Okay.
Which item you have to specify. There will be properties. If you go more details about application, you can specify.
Like an asset flag.
That is.
Okay.
So whenever you select that item, what properties are applicable as per system, that's how system will understand.
Okay, so if initially it was defined as an item or an inventory item, later on can we again change it back to an asset, or if you want to capitalize it?
If you want to capitalize,
yes.
Yeah, you can put that properties for that, so that asset that against that, whatever the purchase orders, whatever the invoices you are creating, you will be able to take into fixed assets to create as asset. That will support for asset definition if you have properties like for that item.
Okay, thank you.
Right. Any other questions here, please? Okay, in the system, how it can be handled, we'll see more detail level. Once we start with the system, once we start working on the P2P cycle, we are going to work on this P2P cycle. So we'll discuss and we'll do it. But to understand what does it mean in P2P cycle, any questions, please? which departments involves what, how the communication can happen across these departments. Any questions from anyone, please? No questions. So this we call as,
Hello.
yeah.
Hi, Mr. Lakshman. Kaushik here. Quick question for you. So I don't want to go too technical, but just sticking for the P2P cycle itself.
Don't mind. Direct question.
Got it. Is it possible that one or few of these departments are not in Oracle? Like some of these applications are happening.
Yes, got it.
Applications are outside?
Possible. So
Got it.
your inventory application may be from third-party vendor. Okay. Remaining these all may be from your Oracle. Okay. So in that case, the technical people should come into the picture to connect that other inventory application with Oracle Fusion purchasing application. The integration need to be built to flow the data from this application to this application. If this application is not from Oracle, say this is XYZ inventory application. Yeah.
Okay. So I have a question again in the same context. So you're saying that a third-party application can be connected with the Fusion, and it will interface the data from a third-party application to Oracle.
Correct. That's true.
Okay, so there's no limitation on the Fusion in terms of like
in Fusion
from
Cloud,
third party to
for integrations. Any third-party application you can integrate with the Fusion applications.
Okay, so if there are any if there are any existing third-party applications that a particular organization is using, say for example along with R12, so the same will be functional even with Fusion.
Yeah, correct.
Okay.
Yeah. Any other questions here, please? No questions. Now we'll go through sales process. Okay, we'll go through sales process. Say we got one order from the customer for 500 laptops. Okay, 500 laptops we got order from the customer. So when there is order from the customer, that order will be received by sales department ideally. Okay, the sales department will check with the inventory department whether stock is available or not. Based on that, they'll take the decision. If stock is available, they'll supply to customer. If stock is not available, they'll start with the procurement process, purchasing process. Now take the case, we got order from the customer for 500 laptops. So order will be received by sales department. Okay, whatever the order they get from the customer, they'll record as they'll create as a sales order. Create sales order. They got order from the customer for 500 laptops. They created that same in their books as a sales order from so-and-so customer for 500 laptops. Now next step is they'll check with the inventory department. 500 laptops are available or not. Okay, if inventory department is going to say yes, 500 laptops are available, the sales department will give the confirmation to customer saying that yes, as you need 500 laptops, within 6 days or 7 days we are going to supply. They'll give the confirmation to the customer. The same they'll record in their books as booking the sales order. They'll book the sales order. Okay. First they get the order from the customer. Stock may be available, may not be available. That is secondary point. They got order from the customer. They'll record in their books. They'll check with the inventory department. If stock is available, they'll book the sales order. They are checking with the inventory department. Inventory saying stock is not available. Even stock is not available, they may give the confirmation to customer, which is scenarios. When they talk to inventory department, if they say stock is not available, then sales department can talk to inventory department. Is there any possibility we can get 500 laptops into our warehouse within 6 days? Then inventory will talk to purchasing department. This is the requirement we have. Can we get? If purchasing department says yes, we can purchase within 1 week. Okay, then inventory will raise the requisition. They'll get the approvals. Then they'll pass to the purchasing department. Purchasing will involve in the procuring the material. Finally, we'll get the material into inventory. Then that material can be delivered to customer. Even stock is not available if there is any supply possibility. Supply possibility means purchasing and selling. Okay, so our organization will purchase from our suppliers and they'll ship to our customers. So if that is possible, in that scenario also sales department will give the confirmation to customer. Two cases. If stock is available, they can book the sales order. Even stock is not available, if there is any possibility of purchasing and supplying, in that scenarios also sales department can give the confirmation to customer. Okay. Sales department received order from customer and they given the confirmation to the customer since stock is available within the inventory. Now what is the next step? Now inventory department should ship the material to customer. In some companies, there could be separate department also, which we call a shipping department. Okay, shipping department can ship the material from our organization to customer organization, or else depending on the company. Okay, inventory department only you can take the responsibility of shipping the material to customer also. Okay, so here first step is receiving order and booking the sales order. Third step is when you talk about warehouse inventory management, how the inventory can be managed, how the inventory can be structured. Let's see the simple. So the specifications, how the things can be managed within the warehouse. If you take this is a warehouse. So within the warehouse, there are some partitions. The partitions we call as sub-inventory. Sub-inventory 1, sub-inventory 2, sub-inventory 3, sub-inventory 4. Maybe in the sub-inventory 1, you may maintain the laptops. Other sub-inventory, you may maintain the desktop. The third sub-inventory may maintain the mobiles. In fourth sub-inventory, you may maintain the chargers. So this is how to maintain the stock separately. You can have a sub-inventories. You can have a sub-inventories. Now, apart from the sub-inventory, there will be separate space which we call as receiving area, shipping area, staging area. What happens is, if you buy from the supplier, supplier will send the material to our warehouse. First, the material will come to the staging area, nothing but receiving area. The truck may unload that material in the staging area. So, which material you have to place in which sub-inventory, you can move to respective sub-inventories. You are selling the material to customer. So you will pick the material from sub-inventory and you will place in the receiving area. Then you will load into truck and you can ship to the customer. So when there is item inflow or item outflow, that happens through this receiving or shipping or staging area. Through the staging area only takes place. So whenever we have order from the customer, okay, now first step is what we have to do is we have to book, we have to give the confirmation. Then what inventory department or shipping department has to do is they have to move the material from specific sub-inventory to shipping area. We have to ship. From where we will ship to the customer, they have to move to that area. This is everything within our inventory only, the partitions. First, we'll move material from sub-inventory to shipping area, or you can say staging area. So whenever you move, this will be done by inventory department or shipping department. The information should be communicated to sales department. If inventory is not going to inform to sales department saying that we moved material from so-and-so sub-inventory to staging and that got packed, if they don't inform to sales department cannot answer to customer queries. Customer may call and customer will ask to the sales department, what about my order status? I'm supposed to get today. What is the update? If inventory is not updating sales department, what happening against that order, sales department cannot answer to customer questions. So that is the reason whenever inventory department will move the material from sub-inventory to staging, they'll inform to sales department saying that we moved material from sub-inventory to staging. If required, they'll do the packing also. So the same they'll inform the sales department. So sales department will make a note in their book saying that quick release is happened. Okay, they'll record in their books against the sales order, quick release is complete. That means moving material from sub-inventory to staging we call as quick release. So now if they get call from the supplier, they can say, yes, we already did the packing of your material. So that sort of information sales department can have. Once they move from here to here, that they're recording their books as quick release. Next step is we have to move the material from our inventory to customer location. Okay, whenever we move the material from here to, whenever we initiate the shipping process to send the material from our inventory to customer inventory or customer location, so that information inventory will inform to sales department saying that, yes, the truck is started now. Okay, that will arrive the customer location by today, end of the day or tomorrow. that information they'll inform to sales department. So based on that, sales department will record their books in their books as ship confirmation or ship confirm. They'll record as ship confirmation. Shipping is confirmed. Okay. Now if they get call from the customer, they can say, okay, the truck already started today morning. You can expect to receive the material within 2 hours by tomorrow. So that sort of communication they can have with the customer to just to reflect what reality happening. That is the reason even these activities, pick and ship confirmations taking place within the warehouse, that information should be available to the sales department. Okay, sales department is responsible to record the sales orders, what are the orders they are getting from customer, and they'll check with the stock availability with inventory department. Accordingly, they'll book the sales orders, and whenever there is an item movement within the warehouse or say inventory, where they move the material from sub-inventory to staging, they'll record in their books as a pick list. Whenever they move the material from our organization to customer organization, sales department will record the same in their books as a ship confirmation. So after doing the ship confirmation, sometimes customer can return the material. Whenever you ship, so say one item got damaged, then customer will return. So that sales department should record in their books against which sales order, how much quantity is returned by which customer, all the details they have to record, that we call as sales returns. Okay, so if required, sales department will record the sales returns also. So this is the responsibility of sales department. What ideal inventory department will do, already we discussed. Inventory department responsibility is maintaining the stock, and they perform inventory related transactions. Okay, inventory transactions they'll record. On the other side, if it is a procurement process, they'll raise the requisitions and they'll get the approvals and all. In case of the sales process, only sales department will be in touch with inventory department to check stock is available or not. Okay, primarily that's what inventory involves in this process. Sales department, these are the activities where they are responsible. So once shipment is confirmed, the sales department will pass the ship confirmation details to receivables department, saying that so we sold to so and so customer this much quantity. All the details will be in the ship confirmation. Which customer, what is the customer address, and when customer has to pay, how much customer has to pay, which item we sold, all the details sales department will pass to receivables department. Based on the ship confirmation details which receivables is getting from sales department, they'll create the sales invoice in their books. Okay, based on the ship confirmation, receivables department should create sales invoice. What you can find within the sales invoice, who is the customer, what item sales department sold, how much customer has to pay, when customer has to pay, how customer has to pay, okay, to where customer is going to send the payment, all the details will be part of the sales invoice. And sales department, receivables department will take the responsibility of following up that customer to get the payment on time. So whenever they get the payment from the customer, they'll create the receipt. You can call it as cash receipt. Okay. So receivables department will get the payment from customer. Whenever they get the payment from customer, that they record in their books as a receipt. Now this receipt information they'll share with the cash department. Okay, already discussed cash department responsibility. They maintain the bank accounts. They do the bank statement reconciliation. Okay, they do the bank statement reconciliation. So this is the primary responsibility of cash department. Here, the cash department will get receipts information from the receivables department. Say they received 50 receipts, and they'll get the bank statement. Okay, for the same period, they'll get the bank statement. Say as per bank statement, it is showing 40. Now they have to identify, they have to find out the reasons. As per receivables department, they received 50 payments from the customer. But as per our bank statement, okay, 50 payments are not credited into our bank. They look into that. So here, the receivables, they'll identify the reasons. Maybe the reason 40 checks only submitted to bank, 40 only cleared. That is the reason 40 payments only reflecting in the bank statement. The 10 checks may be with the receivables department, not yet submitted to bank for clearing, or else they submitted those not yet cleared. It may take some time. So what is the reality that this cash department should identify? So this reconciliation we call as receipt reconciliation. This process, cash department always will verify the receipts with the bank statement related, okay, amount, what are the amount they are received as per bank statement, that they will verify, that we call as receipt reconciliation. So finally, all this information, okay, this all the departments will share with the common department to prepare the financial reports. Okay, to prepare the financial reports, all these departments will share the data with the common department. So already discussed, to maintain the stock and to perform the inventory transactions, to create the requisitions, purchase requisitions, to get the approvals, we have an application from Oracle called as Oracle Fusion Inventory. So to handle this sales department related activities, creating the sales order, booking, quick release ship confirmation, to perform the sales returns, to maintain all this data, we have an application from Oracle that we call as Oracle Fusion Order Management. In short, we call as OM. Okay, order management. Inventory already discussed. In short, we call as INV. Okay, so based on the ship confirmation details, receivables department should create sales invoice, and whenever they get the payment from the customer, they have to create the receipts. To create the sales invoice and receipts, we have an application called as Oracle Fusion Accounts Receivable. Say AR account receivable. Okay, within the account receivables, you can create the sales invoice and you can process the receipts. The receivables department will share receipt information with the cash department. Cash department is maintaining the bank accounts and they are doing the bank statement reconciliations. To do these activities, we have an application called as Oracle Fusion Cash Management. Short name is CMRC. So within this cash management, we can create and maintain the bank accounts and we can perform the bank statement reconciliations. Finally, all the data we are sending to this common department to prepare the financial report, to collect and maintain the data from other departments or say from other applications. We have an application called as Oracle Fusion General Ledger application. We call it GL. Okay, this process we call as order to cash cycle. Order to cash cycle. Order to cash is nothing but, in short, you can say O2C. Okay, O2C stands for, O stands for order, this numeric 2 stands for TO2, C stands for cycle, order to cash cycle. In this process, so the cycle will start right from the order. Okay, order. This will end with once we get the payment. It starts when we get the order from the customer and ends when we get the payment from the customer. That we call as order to cash cycle. These are the three departments or applications primarily involved. The other applications are departments to share to receive the data only. So this process we are calling as O2C cycle. So these are the departments are involved. Okay. So this is all about P2P and O2C. If somebody is going to ask you the question, could you please explain P2P cycle? You have to say, if there is any requirement, inventory will take the responsibility of raising the purchase or purchase requisition. They have to get the approvals. The approved requisition information they'll share with the purchasing department. Purchasing department will request for quotations, RFQs. They'll raise the RFQs. They'll get the quotation from supplier. They do the analysis. They'll choose the best quotation. Finally, they'll place the purchase order to the supplier with approvals. Whenever we receive the material, we'll record the GRN, and if required, we'll perform the purchase returns. If any returns you want to do, we can record the purchase returns. Based on the GRN information, payables department will create the purchase invoice and they'll process the payments as per due date. If purchase invoices belongs to asset related purchase, payables department will share that information with asset department So based on that asset purchase invoice information, asset department can create the fixed assets and they can calculate the depreciation. The payables department will share payment information with the cash department to perform the bank statement, to perform the reconciliations. Finally, all the data will share with the general ledger application or common department to prepare the financial reports. So this is what we have to explain for the question called as explain P2P cycle. When you talk about O2C cycle, could you please explain O2C cycle? Yes. When you get order from the customer, will record the sales order. Okay, the responsibility will be taken care by sales department. Sales department will record the sales order, and based on the stock availability, they book the sales order. Whenever we move the material from the sub inventory to staging, the sales department will record in their books as a quick release. Whenever we ship the material, that will be tracked by sales department as a ship confirmation. If any returns from the customer, sales department will handle the sales returns. The sales department will share ship confirmation details with the receivables department. Based on the ship confirmation details, receivables department will create sales invoice in the receivables application. Whenever they get the payment from the customer against the sales invoice, they'll create the receipt. The receipt information receivables department will share with the cash department. Based on that, cash department can perform the bank statement reconciliation. Finally, all the data will send to or will share with the general ledger application or common department to prepare the financial reports. Okay, here in the P2P cycle, these are the three primary applications. In O2C cycle, these are very primary. Of course, inventory also will have a communication, so you can include this. So this is what we have to understand. If you are clear about P2P and O2C cycle, whatever we are going to work inside of the P2P only. Let's see the two cycles in one go. So this is the P2P cycle. Okay, this is the P2P, whatever I selected. This is the O2C. The P2P and O2C, what are the common applications? Inventory, cash management, and the general ledger application. So these three applications are only you can find in the P2P. These two applications you can find only in the O2C. Okay, so this is our area, our financials. This area we call as supply chain, SCM applications. When you are going to work on this financials application, if you are creating invoice in the payables application, why you are creating? There should be some background. So that also we have to understand. So when you are working on the payables application, if you have issue related to purchase invoice, always you have to check this data only, primarily purchase order and receipts, GRN information you have to check. So if you are not aware of those applications, the basics which are required related to financials, you cannot work on these applications. That is the reason when you are learning the financials applications, we have to learn these basics of P2P and O2C. In our classes along with the financials, we are going to see how we can work on P2P and O2C cycle, what level of knowledge we require. I'll take you through those cycles. Okay, so we'll see everything, how we can set up inventory, how to create items, how to set the approvals. Okay, how the POs can be created, how that GRN, how to perform the purchase returns, how to create invoices based on these details. So all we'll see in case of O2C, we'll see all this, how to create the sales orders, booking, ship confirmation, how to create invoice in the receivables based on the sales order. We'll go through all this. Okay, these are the points we have to understand. These are the various applications belongs to P2P, finance and SCM. But when you look at all these applications, we have to understand one point. So other than GL, all applications we call as subledger applications. Okay, subledger applications means other than GL, all applications are subledger. General ledger is general ledger. Say for example, in AP you may have a 10 transactions. AR you may have a 20 transactions. Total this 10, 20 will come to GL. That is the reason it's general ledger. Here we have a 30, here we have a 10, here we have 20. Compared to GL, these are subparts. That is the reason other than GL, all applications you call as subledger applications. Only GL is a general ledger, which will have a complete data from all the applications. These are the points you have to understand. If you are clear about this P2P and O2C cycles and whatever we are going to discuss and whatever we are going to do in the system, easily you can connect. Without discussing this, if I say, let's create invoice in the payables, yes, you can understand how to create, but you cannot understand what is the background. Okay. So that is the reason you have to understand this complete cycle. When you are going to work on the financials applications, you have to be very clear about P2P and O2C cycle, which is a very core process to handle the financials applications. Any questions here, please? Any questions from anyone, please?